Hello again, everyone. This is Joe Hentges with Beyond the Chart, and in this option trade example, I'm going to show you the details on a very profitable Alibaba trade, so stay tuned. All right, let's take a look here. This is Alibaba, and this is what we're looking at. This piece right in here. Alibaba had been trending down. This is a 233-day, the 55, the 21. I use Fibonacci numbers for my simple moving averages, and then I have a trigger line called the 10 exponential moving average. So when I see them all aligned and Alibaba trending down like it had been doing in August and September, this counter trend move sets up a re-entry type of trade, okay? Because look how strong down the 21 is. So if we look at the details, having seen this, on the 17th, on the evening of the 17th, I even say when, because a lot of times, sometimes it might be in the morning. I'm saying PM, that means after the market closed on the 17th. Well, what's this day right here? It's the 16th. Here's the 17th. So I said, okay, I'm looking to sell at the close if the stock hits 65.25. Why 65.25? That's 1 penny below the low of this big bar right here, which was trading above the 10, okay? And number two, it needs to close less than the 10 exponential moving average, which is the blue line. Now that's where it got a little bit tricky. And then what I do is I recommend an option. I talk about what the average true range is on the stock as of the evening of the 17th, and it was 2.85 on Alibaba. The stop we're going to use a consecutive close above the 10 as a stop, and then I've got an initial target and a target number 2. All right. So now what happened? Here's 2:59 p.m. on the 18th, and this is the 18th. This is the next day right here. Now, so 1 minute before the market closed, it was actually trading down below the 10, and this is where it gets a little bit funky at the close sometimes. The computer systems really start whipping some stocks around as you get into the last few minutes of trading. So literally with 1 minute to go, this was trading down below, and it was like it was going to close below the 10. So I went ahead and entered with the puts, and then bought 3 October 65 puts. Well, why did I get only 3, $975? Because I was kind of targeting for trade example purposes around $1,000 at this point in time in October or September, I mean. So I was really targeting around that. It depends. For an individual, any individual, you could buy 6, buy 9, 12, whatever fits your risk parameters and the amount of capital you're working with. But for the example purposes, we've got this. So we're in here right at the close. We're in with these puts. And the next day, it goes our way. A little fluctuation in the beginning, okay? But we're not worried about that because we're not stopped out until we get 2 consecutive closes above the 10, okay? So right now, it comes down, riding on down, and what happens? On the 23rd, which is right here, it hits target number 1. We sell 1 at the first target, 61.23. That was right in here, okay? And so now we're out 1. And then it comes on down, and on the 24th, it hits the second target, fairly 6 minutes after the opening. We hit it. So now we're locking in profit. We buy at $325. That's $325. So, and we sell 1 at $470. Sell a next one at $695. So we've already locked in some very nice profits. So now what am I saying? I'm saying stop now on a close. Consecutive closes greater than the 10. Or break even, okay? I'm not going to let the third one turn into a loss and take some of my profit away. So as it turns out, on the second, we got this big move back up against us in here and did get stopped out at break even. Actually, so you set the stop so that if it gets back to, on the bid, it gets back to where we acquired them at 325, then we're out. Okay, so then on the total trade, $515, 53% in 10 trading days. Now, how could we have done this a little bit better? The one thing I would definitely do differently on this trade next time, after it hits the second stop, I would definitely tighten the stop to something like a close greater than the prior day high, like right in here, and get out on this day much closer. The other option is to simply exit all the positions at the second target. Okay, that's the other option because it would have locked in. Very nice trade. I mean, if I would have gotten rid of the last two right here, but again, you're always going to do shoulda, coulda, woulda. The reason I like, this last piece, I was trying to see if it would run. You just never know if it's going to collapse like it did back over here on August 24th. But it didn't, and we got stopped out, but we still had a very nice, very profitable 53% in 10 trading days. You're not going to complain about that. All right, if you felt like this video was helpful, please like the video and share the video. I mean, you could share this link with friends. If you could think of one person who might be interested or might find this helpful, please share it with that person.